Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, December 18th, 2016. Hope you guys are having a fantastic weekend and let's get started. So Friday we saw a little bit of volatility. We saw some selling early on, and then towards the last hour we saw some buying step in. I still the best let's say pattern that I see right now is that we have the 5 waves up. You can see 1, 2, 3, 4, 5, and whether that's a wave 1 or an A, however they want to label it, I'm not really worried about that part. But what should play out is that we made an A. This was our wave B. And now we're going to come make a wave C that's going to come anywhere between the 2242 to 2232. So that would be the the target area that this wave C would come. Now it could go further than that just because of the extended bearish divergences that were in place on the way up, and after 5 waves it actually it's excuse me, it could go all the way down to the 62 or 78% retracement and still fit that wave 1, 2, and then wave 3 or an ABC up. So right now, if everything was going to make sense as far as patterns, we should head lower. We're in a very, say, bullish seasonality time period right now, so it may be ignored. I would, if you took the short position last week, I mean, just manage it pretty tightly. Don't, if we start moving higher, just accept it. It was, looked like it was going to work out really well. We had a big drop after the Fed meeting, but the day after we had a big move up. So it's one of those things that, it could work. We could see the S&P head down to the, to the target areas that I was mentioning. But, because of the seasonality and really the aggressive buying that we're seeing from the bulls, it may not. And what happens is you just accept it and say, okay, I broke even, no harm, no foul, and that's it. Either you could try long side. I'm still not a big fan of it, even though the seasonality and everything is on the bull side. I just it's really, really hard for me to go against what I see on a technical front, even if it does continue to go higher. Me personally would rather just just sit on the sidelines and wait for the next trade setup that has confirmation from a technical standpoint, as well as a timing and sentiment. And right now that's totally skewed towards the bulls, which means that the what we'd be expecting would be a move to the downside, which is the counter move to the, say, public that everyone's believing that it's heading up and it heads down. So me personally, I'd rather just sit and wait and not not jump in. But if you do jump, let's say we start to head higher on this, really what the confirmation would be that we are heading up would be that probably a move above this 2271, and then the real confirmation would be above the 2277, obviously, because we'd be making new highs. But if you took a long side trade, you can just really put a stop anywhere between the 2254 and the 2247. So this would be your wall of the stop if you took a long trade. And then if it does take off and it starts heading above these levels, then you just move your stop a little bit below this area here. But you just keep moving it up, and you could try to ride it that way, and it could work. But like I said, as far as the wave counts and the patterns, it would make more sense for the move to come down first, which may be very similar to what we saw Friday, down fairly large, and then it finds support and heads up or something like that. So that's a something you got to keep an eye out for. Now, resistance, we have the moving average at 2262. You can see we actually have a little bit of a bullish divergence because we made a new low. It's small, it's tiny, so it's one that I don't pay all that much attention to, but it could be something that triggers a little bit of buying. What the bigger, say, bullish divergence would be is if we head lower here and take out these lows, and then from there we see a bullish divergence. That would be something that you want to pay attention to and possibly could jump on the long side. But again, that's calling for a move below these lows, and again, it's coming into the target area, so you can start building a long position down all the way down to the 2206. Layer in if it gets down here, and just expect that the next move is going to be to the upside. So so that's pretty much it on the 60-minute chart. We still have plenty of room as far as momentum and MACD to get into the oversold levels. We had the bearish divergences here on the 60-minute price oscillator and the MACD. So again, it would make sense if we had lower, but right now what we can see is that we have the wedge support as well as this price support, and this is kind of the trigger line right here, and this is the 2247. So if they break that, we've seen this happen a lot where it breaks support and then heads up. So if it breaks it, we could see it head down to say the 2239 or 2231, which are the target areas down here, and then have the a big up move during the day, and we end the day pretty much like this, where we were down 10 and ended up down 4. This could be something that comes down to these levels, and then we find buying, and it could be down 14 or 15 and ends the day up 5. So so this is really the line that you want to pay attention to. I would say right around that 2248. If it starts breaking it, then you can assume that we're probably coming down to one of these levels here. And if you take a short position, you just put your stop a little bit above the 2260 if you wanted to just jump in on it. And really what the bulls need to do, though, is get it above the 2264, 2271 area. That will get them out of the woods. The bears need to push it below this little this congestion line right here, support, for possible targets to the downside. So if we look at a daily chart, we don't have the bearish divergences on the daily on the momentum. Very, very overbought, when we also have bearish divergences on the MACD. So often, before we get a larger drop, we start to see bearish divergences in the price oscillator. So that's suggesting that any move to the downside should be just temporary, and from there we head back up again, and that's going to start causing the bearish divergences to start forming on the daily chart. So that's, like I said, it would make more sense if we come down to, say, some of these support levels here, make the wave C, and then head higher. That would, in a perfect world, that's what would be taking place. We have to just kind of wait and see how things play out. But I'd be a little bit careful, really both ways, honestly. But I'd be careful if you're just looking long, because, like I said, sentiment's at extremes right now, and we have patterns and wave counts that are looking lower. But in the same sense, you want to be very careful on the short side and manage it pretty closely, because seasonality wise, it's in the it's on the side of the bulls. So you got to make sure that the stops are in. So with that, enjoy the rest of your weekend, and I will talk to you guys in the morning.